Our next guest says, although China's reaction to the Taiwan election has been calm so far, there is still, as Una said, the potential for military activities in the near term. And he warns there are uncertainties for companies that rely on China. Dewardic McNeal is managing director and senior policy analyst at Longview Global. He's also a CNBC contributor. Dewardic, good to talk to you. What does this mean in the near term, you think, for this delicate balance that the United States has set up with China, especially because we've already seen today China is pushing back, giving a slapdown to, say, Philippines president because he congratulated the new winner of the Taiwan election?
Thanks for having me, Contessa. Look, I think what you are seeing here is that the risk, the geopolitical risk in the region remains high. I think we can all breathe a little bit of a sigh of relief here in the near term that China's actions, although not its rhetoric, has remained moderate and somewhat measured. But as you pointed out, there's still a lot of risk here in the Taiwan Strait, but also in the South China Sea more generally with respect to the Philippines and the actions that's happening there. But I think China's going to have to be very careful here, Contessa. We are also in an election here in the U.S., and if things were to derail, if there were any missteps like the balloon incident from last year, there's not going to be any time to recover and repair this relationship like we had at the end of 2023.
Meaning what? That whoever would come into office next would do so having to crack down, but very publicly against China?
Well, I think you're going to immediately have a situation where China inserts itself into the U.S. elections in a way that's not advantageous to China. It will force the Biden administration to really move away from the spirit of San Francisco, as I call it, this commitment to open dialogue, to high-level meetings. And so if China is smart here, they would tread very carefully as we move through the U.S. elections here. And so far, to their credit, their actions have been moderate. The rhetoric is overheated, but we can all breathe a near-term sigh of relief. But over the long term, businesses should still be concerned about the risk of a U.S.-China conflict or incident, particularly in the Taiwan Strait.
It's interesting because when I speak to high-level insurance CEOs who have businesses all around the world and they're keeping close tabs on it, the geopolitical instability is a worry for them. And what they say is you cannot disregard what's happening in the Far East, that what China is doing to set up its dominance in the world, the way it pays off other countries so that they will disregard any claim to independence from Taiwan, that they will sever diplomatic ties with Taiwan, that it should not be disregarded. And at the same time, then you have China's premier in Davos telling the crowd of global businesses there, look, we're on track for, they said, 5.2% growth for 2023. That's the estimate that they're coming out with. Basically trying to reassure all of these global business leaders that China's a great place to find business opportunities. Is it?
Well, look, it's a mixed message for sure. And Li Cheng has certainly been the one deputized to carry the message that China is open for business. Look, what I say to companies all the time is you have to try and manage for these risks. You have to think about contingencies. I know de-risking is complex. It's hard. It may not be popular, but they should continue to try because these risks are very real. And finally, Contessa, I think, what I say is at least have a way in which you've thought about all of the possible contingencies and how this could go wrong. And I'm finding even some resistance from companies to even having contingency plans. And I think that's very dangerous, to be quite honest.
You're nibbling around the area I wanted to get your advice on, and that is, what would you advise CEOs of American businesses or global businesses to do if they are manufacturing in China, if they are selling and China is a major market of theirs? What is the posture? What is the footing that they should have? And when you say de-risk, there are lots of ways to de-risk. What are you describing there?
Well, it's a good question, Tyler. Listen, I think to the degree that if you're dependent on China for any major part of your supply chain, you have to start now. Take the space that we have now, the peace that we have now, to try and put in place ways in which you're not solely dependent, that China is your single point of failure in terms of your supply chain. For companies that rely on China as their market, this is a little tougher. But for companies that have China in their supply chain, they should start now. But Tyler, here's the thing that's important to point out to American businesses. Chinese businesses are doing the same thing. They are finding ways to duplicate and move things to Southeast Asia and other places because they also fear what may happen in the long term in this relationship. So I say to U.S. businesses, just look at what your competitors in China are doing. They're also moving some duplicate capacity in other places south of China.